Greetings to the weeks, guys. We hope this video finds you well. We are here with another trading idea. So quick and short, let's get into the week sentiment. Right now, during of this recording, market sentiment is risk off, and not a risk off, but it's a kind of red risky market. The week's index movement is upside, that shows increase in the risk. Gold and oil, after a half-day rally, now are in correction retracement. The stronger currency is the US dollar, and the weakest one is Australian dollar. Swiss franc, pound, CAD, New Zealand dollar, and euro are all weaker than US dollar. But what is the risk? Conflict on the Israel-Lebanon border and ongoing attacks in the Red Sea have raised concern about the global economy. As long as conflict are contained at current level, oil price will remain under pressure. Also, for oil, the critical position of the Iran Hormuz is the entry point to the Persian Gulf, not the Suez Canal. But even if oil continues to flow normally, if the conflict flare up beyond Gaza and the mentioned conflicts, the sentiment of the market will be another risk off, and the price of gold, yen, and Swiss franc will be increased. Although the dollar itself is a safe asset, but US management of a coalition in the Red Sea can also involve the dollar in this risk aversion too. Right now, everything seems under control, but as a trader, we must watch out for. And now let's talk about macro fundamental. Recently, the expected time for the first interest rate cut in the UK has been moved to May meeting the Bank of England considering easing monetary policy then. Earlier, financial market predicts a 5-quarter point reduction at the peak of rate cut expectation last year. But now they are pricing a total on 116 basis point of rate cuts for this year. This adjustment is expectation has supported the British pound against the US dollar and the euro. By looking at the economic calendar of this week, Thursday, the main event of the week, the Fed is still focused on inflation despite the slowdown in the labor market. The consumer price index CPI is the most important inflation report and supposed to show more moderate in price increases. Core CPI is expected to come down on Thursday report. The other two monthly and yearly forecasted to be higher. Core CPI is the most important figure, followed by CPI year of year, which is what consumers care about. I expected weak data can closes the case for rate cut in March will make a weaker US dollar and a rally in gold and stocks. However, this is the complicated where every 0.1% makes a huge difference for the market. This really is also bring with a lot of volatility, so trade carefully. Okay, now as we try to cultivating or trading idea for GBPUSD, let's dig in the terminal data. The pound looks green, the fundamental bias is bullish, the AI forecast is bullish too, and retails are in short. That is another bull confirmation, and we typically take a reverse view to retails, and this fact trader on net short suggests GBPUSD price may continue to rise. The economic category is holding the pound forecast higher. Although the UK is not reporting CPI this week, they are showing GDP number on Friday and on day before the US CPI. So, the stronger of a higher GDP could be a good sign that the pound could be getting stronger. If we see a combination of a weak inflation in the US and the higher GDP in the UK, the pair seems likely to find more upside. Let's check how the market makers play the role. By looking on COT data, it will be revealed to us the side of smart money. They are in long net position but closing around 700 contracts, and the ratio of them are mixed, 54% long and 45% short. and they buy pound by around 1,000 of more contracts, 8% more than last week. And by take a look at the interest rate that shows oversold area for positioning on USD. So if it need to get more buyers involved in US dollar, all of the bullish signs could disappear. Now it is time of technical. Let's dive. Even though GBPUSD is trading in a bullish trend since October, the pair is in a deep consolidation the last 3 weeks. You can see on a daily time frame, it shows the price is in a balance of supply and demand, and it now needs some drivers to make a momentum to exit this box area. Depending on the reaction of the price, we have two potential scenarios. Number one, for bullish scenario, if the price break and close above the 1.283, we can anticipate a movement higher to 1.200 resistance here. And for bearish scenario, if the price violates 1.26 support and close below that on a daily, a bearish continuation may follow to 1.243 levels. And because the long term is bullish, we remain on a bullish scenario too. So we will waiting for US CPI and pound GDP as they are the main drivers for exit from this consolidation area. And so good luck everyone, and don't forget to subscribe channel to make sure don't miss our future trading idea.